Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So it seems that yesterday Fed minutes was even more important than the CPI numbers, which was actually very close to the expectations, but there are still some nuances exist, especially in the core CPI and how the actually different price changes distributed among the parts of the index. So we will take a look at it in the weekly report, and there is a lot of interesting stuff. So in general, why we see the upper direction currently, as you know, probably from the Fed minutes, that actually there was the first time when among the members of the Fed committee sounds the word recession, which is actually Fed now is even as minutes shows, we're considering the possible pause in rate change in March. So Fed probably, as a rule, wrong with the expectations and forecasts, and it means that currently already stands in a recession. But anyway, this is a very important psychological moment. In general, currently the situation with inflation is very tricky. Actually, the decrease that we see right now, it is mostly, well, just the byproduct of the calculation way, because right in March last year, it was the major jump in inflation in 1 month, so more than 1%. It's 1.19 if I not miss something. And currently, you calculate the change in March right now to the moment that was precisely 1 year ago when the major change in inflation was. Corresponding to that change that was last year, this year change, of course, looks smaller. And from that standpoint, indicator shows that inflation is dropping. And this is a very comfortable moment for Fed to declare, for example, I don't know, maybe we'll use this moment to declare the victory over the inflation. And that could give them chance to change the way of the policy if they would like to. But later in this year, definitely inflation will keep going higher. When basis of the calculation return to the numbers that we see in summer, for example, where inflation change was not too strong, so you will see that inflation will keep going higher. So I think that inflation around 5% will last for a long time. But this is a separate question. This actually fundamental background exists of the global character. Mostly it stands in the drop of the global productivity, efficiency of the production, and really significant money printing. So it's now, in two words speaking, the just money supply is not backed by the real goods and products, and that leads to inflation globally. It's one of the reasons, and this is the reason why inflation will remain high. But right in the moment, Fed could try to use it to change the vector of the policy, and probably maybe they will do this. Some members talked about that maybe it's time to not rise rate anymore because the effect of the high rate will last for some time. As you know, this lagging effect approximately 6-8 months. So currently, although the rate stands 5%, we are living in an environment where the actually 3.75, that was approximately 7-8 months ago. So, and it means that the major impact of the high rate is yet to be felt. So, it comes with half a year closer to the autumn probably. We will see what will happen. Now, all this background has pushed, as you can see, some assets to the upside, particularly speaking euro, gold, and others. So, we keep the fundamental discussion of the inflation and what will stand to background, what to expect as usual for the weekly report. So lots of interesting stuff around it. Right now, meantime, we see that euro currency is getting positive impulse, and things that we talked about yesterday. Recall what we said, that here might be some signs of the bullish dynamic pressure. And despite trend has turned bearish, price action was not bearish. And on the intraday charts, we have discussed this yesterday. So, and as a result, you can see immediately trend has turned bullish once again. Our hand shoulders that we discussed on our chart has worked mostly, so it has put the foundation for our prediction. On the daily chart currently, we do not have any significant targets except maybe the extension of the retracement. It stands around 111.73. I'm not sure that for within the 2 days market will reach it, but still, as you can see, it accompanied with a daily overbought, and probably we should use it as an ultimate target for this week. Although it's not fact that market will definitely complete it, but still we have this level. It's 111.73. On the lower time frame, on the fallout time frame chart, market stands at this narrowing consolidation, but we have really signs of the acceleration. This is good for us in action. Market is coming to 127 extension here of this swing down. 1618 will stand around 110.60 right there. So it's probably the target that also could be reached because it's really close. Here we see definitely signs of the upper direction, acceleration. So no bearish signs by far. But in the short term, within the few hours, we could get some minor pullback here, just because you can see that market is coming to extension, this resistance, some kind of the resistance exists. And on the hourly chart, based on our hand and shoulders, you could see that market has completed the OP. With this upper direction right to the OP, obviously we have to consider the XOP as well, which stands at the same 1052, mostly we could say same 1060 area. And here we could consider a few levels for a possible pullback if it will happen. So it's 109.60 the first support, and probably 109.30. Hardly we will get this too big sell-off and raising of this upper direction. So most probable that market will reach either this one or that one level. So we could keep an eye on for possibly taking the long position. So that's our hand shoulders, if you remember. Its shoulder was not really too significant. Market has not reached 108.85 that we talked about just for the pips and turning up here. But in general, you could recognize the overall shape here. It's ABCD pattern based on this reverse head and shoulders. So let's see what will happen. I would not consider currently short bearish positions, watch for a minor pullback, and keep an eye on next destination point, which is around 1050, 1060.